Please, you may be seated. Hallelujah. Having invited God into this gathering, please, let's take the university anthem. Shall we rise? Please, let's be seated as we invite the LUCRID for prologue of the webinar.
Thank you, the Hemi, the Vice Chancellor Lamar, the Registrar. Permit me to stand on earlier rolled out protocols. We are grateful to God, the founder and the founder of Lamar University. Our deep appreciation also goes to the Chancellor and Pro-Chancellor of our amazing Lamar University for their continual support towards sustaining the vision quest of attaining a global limelight among the world-class university. The LUCRID webinar series has been a platform where we showcase scholars in their various fields of endeavors to share their thoughts on trending issues of global concern. I'm glad that Mr. Ademola Oladewaju of the Ascension Consulting Services is ready to do justice to the theme Finance Act 2021 and Tax Compliance, being the 24th LUCRID webinar. I want to especially congratulate the Dean, College of Business and Social Sciences, the HOD Accounting and Finance Department, and in particular, Dr. Oladipo Olufemi and the team members of SDG 17 for the team spirit and togetherness in bringing forth this 24th LUCRID webinar. I want to say thank you all for your rapt attention.
Please, a round of applause. At this point, please, Visima, permit me to welcome the HOD Accounting for his welcome address, Dr. Fakile Samuel Adedere.
Thank you very much. The First Chancellor Lamar, the Registrar, please permit me to stand on already roll out the protocol. Taxation is essential for economic development. But unfortunately, in our nation, we are still lacking behind the international standard of generating revenue through taxation. And like the Dean, College of Business and Social Sciences, lectured us yesterday, we can see lack of financial intelligence in the management of funds, management of governance in Nigeria. The society is dynamic, therefore, the tax laws must equally be revisited constantly to take care of the changes in the society. And therefore, when the Finance Act 2021 was enacted, it gladdens the heart of some of us in the revenue area. And actually, these amendments are pivoted on revenue generation, promotion of tax equity, and ensuring clarity in the tax laws. Like I said, the revenue generation is very essential for economic development of any nation. And it is unwise to spend much more than you earn because it becomes a liability. You go and borrow, you have to pay on that borrowing. It's only taxes, revenue raised through taxes, that is, it's free of any liability. It's free. You are not paying interest. It's a compulsory levy on individuals in any nation. So for a serious government, this is an area one should really look into in generating revenue. In general, it is expected that the changes introduced by Finance Act 2021 will improve the country's fortune, boost investors' confidence. That is very, very important. If there's no clarity as to your tax policy in any nation, investors will not come. And it's very essential that that clarity should be there. And this will lead the nation on a path of sustainable growth. I therefore welcome the presenter of today's lecture, Mr. Ademola Olanrewaju, and every one of us to this lecture. God bless you.
Please, a round of applause for my HOD. Thank you. Please, at this point, I want to welcome the representative of the Registrar Lamar University for opening remarks.
The Vice Chancellor, Lamar, the Dean College of Business and Social Sciences, every member of the high table, distinguished faculty, staff, and eminent students. On behalf of the Vice Chancellor, Lamar University, I warmly welcome everyone to this gathering. It is no longer news that we've been driving webinar series in Lamar University to the admiration and recognition across the world. There's hardly any time webinar is organized in Lamar University that we are not connected online, not only nationally, but internationally. It is a thing of pride for a university that is intentional in ensuring that we occupy the leading position among the community of universities across the world to continue to sustain this. It is on this note that I heartily, on behalf of management of Lamar University, as I stand to represent, doing so on behalf of the Registrar Lamar University, Ms. Adefunke Oyinloye, to welcome everyone to the 24th LUCRID webinar. It is axiomatic, indisputable fact that if you do not plan, you plan to fail. Your failure to plan is akin to you indirectly planning to fail. Since we, as a university, with frantic effort in place to ensure that we raise a generation of reformers, we have decided to bring about this theme, Finance Act 2021 and Tax Compliance, of 24th LUCRID webinar, which implies that no matter the resources we have, we need to plan. No matter how good our intentions are, tax is key. How to finance is crucial, what we have as our resources. Therefore, I encourage everyone present and everyone that has joined us online to be expectant, to be full of hope, and be selective, be attentive in what our facilitator will bring on board today to dissect the topic, Finance Act 2021, an act that has gone through reform to bring about a better life for all and transformation of our society. Inclusive of it is the compliance of whatever government has put in place in order to ensure that our resources are adequately used. With this mindset, I encourage everyone to be more attentive. On behalf of the Registrar Lamar University, I welcome you this morning, and I pray that God Almighty, that has made this, the ones done in the past, successful, will cause you to be part of the success story of Lamar University. You are most welcome once more to the 24th LUCRID webinar series. Having done that, the second assignment given to me on behalf of the registrar of this great university is to bring up the Vice Chancellor, and I would like to crave the indulgence of everyone to rise as I humbly bring up stage the Vice Chancellor, Lamar University, Professor Charity Aremu, for our remarks.
Thank you so much. Please, may we be comfortably seated. I'm glad this morning to be part of this 24th LUCRID webinar of Lamar University. Yes, starting the first, the second, the third, up until today, the 24th. God has been on our side. I appreciate the registrar, bringing the opening, the remarks from the registrar's table. The essence of all of these webinars is to, one, educate us on, of course, the standing of our university in the area of information, providing information in the area of teaching, learning, and of course, research, which is our tripodal mandate as a university. And then whatever we are able to make out of this, get them out to the external community in the name of impact. But we cannot be doing this all alone. Because of our vision quest, we must reach out to the external persons, not necessarily within the confines of Nigeria. We also maximize secondly, why we organize webinars, to maximize the opportunity created by FUCA. When you have the environment becoming so volatile, people are highly apprehensive of moving from one station to another. And so they can deliver from wherever they are. We can receive or whatever they want to come here to do. from wherever they are, and thereby be able to save time, save lives, and still communicate. And so that's why we as a university, we have embraced webinar series. And so on this note, I want to welcome us to the 24th LUCRID webinar as we look at another topic today. And I welcome us on behalf of the proprietor base of Lamar University. Recall we started with singing the anthem, meaning that this is a university gathering. And so we have to appreciate the proprietor base, the Chancellor Lamar University, the Pro-Chancellor Lamar University, and the Secretary of the university, and the registrar who just spoke a while ago through the office of the head of corporate affairs of Lamar. And I'm standing here this morning to further prepare us to the meal coming after me. The meal, the table will be, I'm only setting the table. And so when the real speaker, the facilitator comes on board, he will be dishing out the meal to us. And today, what are we doing? We are looking at Finance Act 2021 specifically, and then compliance to tax. Compliance to task. Why are we looking at all of this? We have taken the protocol moving forward. We want to say that generally money is crucial to everyone. I know without money, we can't have the students here. Their parents are paying school fees. That's why we receive them as students. If you come in here 1 month, 2 months, you have not made any payment, at least 60% payment, we will not see you as our student. If you want to remain, then you must have an undertaking. That means it's all about money. And for all of us sitting at this other side, if we do not receive something drop in our pockets on a monthly basis, we may begin to ask questions. And that is why we said, let us have even the man in charge of money in Lamar University to be part of this, so that we all receive an inclusive and holistic, information as it has to do with that act. And so in Nigeria, of course, today we look at laws. We look at how people are compliant to these laws governing money in the name of task or tax. And in doing this, there are several things we need to also embrace and understand. Because our compliance to the act and of course to tax as may be demanded from us is one of the fundamental rights of you and I as the citizen of Nigeria. And it is therefore worth noting that any act of tax, eviction is an anathema. When we disobey, when we are not compliant, then it's not correct. So what are those things that may serve as hindrances to you and I complying? Yes, we look at why do we need to pay tax? Or how do we need to pay our tax? If we have to pay our tax, then we must expect some benefits from it. I recall I was, tripping from Omu-Aran, I think on Sunday, this way, and the person, driving me, I said, please be careful with those potholes, because the first time he jumped into the potholes, bosa, and I started feeling some things, on my car. I said, please, there are so many ditches here. Drive carefully, because I will have to spend more, to maintain my car. And immediately I just said, for God's sake, I know how much DFS deducts from my salary in the name of tax. Where are this money going to? Because we believe the tax should be spent for me. If I pay, it should be spent for me to take care of the road I ply every day. Not only that, to ensure that my security is intact. Not only that, to support some facilities. When I got to my house in Omu-Aran, there was no water, there was no lights. All of these things, they are issues. And we say we pay tax because we believe that these are the things that tax should be spent on. These are projects that my tax should take care of. And that's why we believe we should pay tax. But incidentally, in the other developed nations that do what we do, We know the benefit they derive. I was telling someone my experience sometimes, was it in Dr. Professor Wanji's city, I think somewhere in the UK. And one evening we were just strolling. Hey, my host said, well, Charity, I will make money tomorrow. I said, what do you mean? There was a small ditch, for God's sake. And she said, if she dares maybe wear a heely shoe and steps into that ditch, she will try and make sure it's the shoe that is spoiled that she's wearing. And she will just snap it like that and take it. I think they use county or whatever they use there to describe locations. She will just snap it like that and take it to wherever. And she will make a lot of money from it because they pay tax and they believe that their roads should be most comfortable for them to use. And truly, I was so excited, to be part of that drama. In fact, we were already saying, when they give you the money, you will share me. But at the end of the day, you know what happened? The following day, sir, by the evening of the following day, we got there. That small ditch was fixed. That small ditch was fixed over the night. These are the people that pay tax. And we are also paying the same thing. So the questions remain. What do we mean by this act? That is everyone's question. We have to understand and have a good knowledge of the changes, because I've come across Finance Act 2018, Finance Act 2019, Finance Act 2020, So what do we mean by this Finance Act 2021? Why these changes? And what is the effect on my own PIT, my personal income tax? What is the effect? So these are the things, and asking these questions, I think it will benefit all of us. SARS and MA, that is why we are having this webinar today. And so I want to appreciate, the Department of Accounting, the HOD, sir, this is a good one. And more importantly, our own Dr. Femi, you have done well, sir. We appreciate this great effort for bringing on board the common questions that everyone is asking. Why changes, Financial Act 2021? And what effect does it have on our personal income tax? We want to appreciate our facilitator who is online. He's been listening to us, and that is in the person of Financial Demola. I don't want to call him Mr. Financial Demola. We are glad to have you come on board this morning, and we believe what you'll be teasing out to us will help us to gain understanding. How I wish we have faculty and staff, flood this place this morning so that we're able to tease out something that will help us to appreciate what Landmark is doing. Because if we want to look at how much I should pay, I'm not sure I'm paying exactly what I should pay. And this has been by the effort of, the Landmark University management and the good understanding that our own financial Fatiregun has in the area of computing this task as related to faculty and staff. So I want to welcome us to this 24th LUCRID webinar, and I say thank you for coming. God bless you.
Please, let's rise to our feet. You may be seated. Thank you, Visima. Please, Visima, at this juncture, permit me to welcome Dr. Oladipo Olufemi for citation of the presenter for today's webinar.
Thank you very much, Amy. The Vice Chancellor, Lamar, and all other protocols to be observed. I count as a great privilege to just read the citation of the financial Ademola Olanrewaju. Ademola Olanrewaju is a partner and head business tax compliance in essential consulting services with responsibility for practice management and development. Mr. Ademola's experience covers effective tax planning and strategy, tax risk management, tax efficient contract structuring, tax dispute resolutions, cross-border tax planning, managing tax issues in data economy like e-commerce, taxation, tax due diligence, among others. Prior to joining Essential, Mr. Adeola was at Business Connections as Chief Financial Officer, CFO, with responsibilities for the company's financial planning, forecasting, budgeting, and reporting, among others. He was also at Sanfron's Professional Services for about 3 years as a manager with overall responsibility for the firm's business tax compliance services, involving corporate and petroleum profit tax, among others, and at Ernst & Young for 7 years, where he started his professional career. Mr. Ademola is a fellow of both Institute of Chartered Accountants of Nigeria and Chartered Institute of Taxation of Nigeria, CITA, Certified International Financial Reporting Standard, ACCA, UK. He holds BSc in Economics, MBA Finance from Obafemi Awolowo University, Ile-Ife, Osun State. He is an alumnus of prestigious Lagos Business School and Strathmore Business School, Nairobi in Kenya. Mr. Ademola brings to bear his industry experience, having previously worked with major multinationals on several projects, managing and providing advisory on strategic tax issues. This has been of great help in providing practical tax advisory and solution to clients and strategic tax issues. He is a paper presenter for relevant professional bodies, including CITN, that is Chartered Institute of Taxation of Nigeria, and recent of which is on the challenges of tax compliance in digital economy. Ademola is a proponent of tax compliance, recognition of taxpayers' rights, and resolution of tax disputes on point of law and facts. It will be interesting to know that Mr. Ademola is happily married with children. And the Vice Chancellor will be interested to know that Mr. Ademola also a parent here in Landmark is one of his wards, is in the Department of College of Business and Social Sciences. Please join me to welcome Mr. Ademola Olanrewaju for his presentation. Thank you.
My Visima, please permit me to welcome the presenter as he presents online. Presenter, sir.
Okay. Sorry.
Please, sir, you can go ahead if you can hear us.
I can. So can you see my screen? Hello? Hello? Hello?
Hello, sir, we can hear you, sir.
Okay, thank you, and good to have me presenting here today. I want to thank the faculty and the department, especially Dr. Olufemi Oladipo, for following up with me and for creating the platform to bring this presentation to us. I say good morning to everyone. Please, I just want to be sure that you can hear me. So I will not just be talking to myself. Please, can you hear me?
So we can hear you, sir.
Okay, thank you. And also, maybe it's essential for us to start. I could see the reference from Madam when she was concluding our presentation, when she used Deuteronomy 8:7-10. That thank be to God that have brought us to a broad place. So it's a privilege to be part of us today. So what are we looking at today is actually the effect of government regulations. I call it regulations, both Finance Act and Personal Income Tax on employee and public service sector generally. And we'll be looking at this issue together today. Let me start by saying that the tax we are talking about has been there all along, and we are all here today that has brought us from the impact of this on individual pockets and then the organization generally. So I'm going to take you through the Finance Act and the Personal Income Tax together. Before I start fully, I also need to comment on what Madam said, that the purpose of taxation is actually to take us and then repair things for us, or the benefits individual discover from the taxation, which we are not getting here. It's not the fault of individual, it is the fault of those that we have elected to lead us, in all honesty. She gave instances of a situation in the UK whereby when something happened to you on the road, you can actually challenge the authority. I've paid my tax, but I'm not deriving required benefits. And that's what brought us to where we are. We cannot separate the institution, for example, Landmark University, from what is happening in our society. Tax cover is from the government, and it covers the entire process and not only an institution. So whatever we see as an example within our road in Omu-Aran, it's the same thing that is happening in Lagos and the same thing that is happening in Abuja. Most of our laws are federal laws that are applicable to everybody, wherever you are within the nation. And that's what we'll be looking at today, the impact of this. So why the Finance Act? I've mentioned that what we are going to look at is just the changes that happen. That's what has been given to me in Finance Act 2021. There were about 31 changes. We're going to look at this quickly, one by one, before we come to the impacts. By the time we come back, it covers the capital gain tax. Maybe I need to just quickly summarize because of the student and other people there. Capital gain tax is actually the tax paying on gain recorded when there is a disposal. When I mean disposal, sales of any capital asset. It could be car, it could be house, it could be anything that is capital in nature. Whenever there is a gain on it, you are expected to deduct 10% after you have removed relevant expenditure, and pay that to government. When you pay to federal government, it is at 10%. When you pay to state government, it is at 5%. Also, company income tax is the tax paid on the profit of a company once in a year. And then Section 55 of the Company Income Tax Act actually give the procedure for the purpose of this return. We also have value-added tax, which is each value adding to a transaction, and then you are expected to, then it used to be 5%, but now it's 7.5% on such transaction. And we have for tertiary education trust fund, is basically to fund our institution. But I need to ask, why do we still have ASU on strike for several months now? And then so we need to see whether all these taxes are actually performing the function for setting them up. Now, Nigerian Police Trust Fund has been introduced also to taking care of the police. The question that will arise here is, what is the purpose of my company income tax? And then they also introduced NASIMI, which is National Agency of Science and Engineering Infrastructure, NASENI Infrastructure Act, also on the same company. Police Trust on one company, National Trust for Engineering on company, company income tax on the same company. So then we now need to see that, do you think everybody is actually inspired to go on doing business in Nigeria? Is the easy of doing business in Nigeria so easy? I doubt it. With these several taxes on the same income, whereas the individual has sourced the money from the financial institution, but everything is coming to tax payments. So we look at this, and then the changes in stamp duty, we're going to look at that also. Then we'll come back to what is personal income tax, key definition of tax, residency rule, minimum tax. Then we close it with general question. So thanks for listening so far. So what are the objectives today? We said for the purpose of this is to bridge the gap between the academic and expert in the field in relation to the Finance Act, have a good knowledge of the changes, have a good knowledge of the changes of the Finance Act and its effect on the preparation of tax returns to enable our staff and students. So the staff and students of Landmark University gain practical knowledge from the expert, especially in the area of personal income tax. So, and I start again, the reason for the objective that government set out when these changes were being made, the first changes came actually in 2020 when the Finance Act was unprecedented. It touched all aspects of taxation where we have been having issue over several years before the Finance Act 2019. And since that time, we've had 2020 Finance Act, and then the latest one being 2021 Finance Act. The 2022 have been made now. They've invited a part of the gathering, view things. But I need to mention this, which is very, very important about our environment. So difficult to change who we are. Most of the changes that have been made after the 2019 have actually been addressed only where majorly where government have lost out in a matter of legal litigation process with all the taxpayer. Almost everywhere they lose, they go back and amend the law. They go back. So it's becoming so hard to actually operate our tax. It's becoming so hard. All relevant incentives are being taken out, and the reason for tax planning for the purpose of running business is becoming smaller every day. So which I think has been the reason for most of this problem. So as I mentioned earlier, but to government, its purpose is that it was to promote fiscal equity by mitigating instances of regressive taxation and to reform domestic tax law. That was the desire of the government when they were making these changes. But with what we have seen, it actually helped them to generate more income. But what I can see that whether generating that income has helped the individual and both the corporate organization to grow their wealth so it can impact on the generality of the people. That's the objective of this. So I go specifically to those changes because of the time. Before this act, gain on disposal of shares and government security are exempted from taxes completely. The reason why companies are merging them, they go in form of shares, that when shares exchange happen without the cash, then it is exempted from taxes. But government came with the changes of Section 30 of Section 2 in capital gain tax and saying, yes, for government security, when we say government security disposal, treasury bill, the bond by government is still exempted from capital gain tax. But what about the individual company? When there is a change and then there is a disposal of shares that is more than 100 million, you are expected to file the return and CGT will be applicable on it. But where the money of the disposal of shares is reinvested into the Nigerian business, it is totally exempted from taxes. If you look at the impact on the company, what has happened is that capital gain on disposal of shares by any person in aggregate of 100 million above will now be liable to CGT at the rate of 10%. So, and then we look at the Section 23 before actually addresses the income exempted from taxes. And what the government has done is they have brought material changes to the act, which is impacting. But I'm surprised till now, no educational institute are stages. So Nigerian taxes is that where do they want them to make profits? Do they want them to make profit on the citizen, on the individual? Because they are not selling any item than the students. But to deal with the law, now all educational institutions, ecclesiastic, are now to make only all educational institutions in Nigeria are now to make CIT return, company income tax returns. Also, initially before the changes in 2021, profit of company exported items were completely exempted from taxes when it is used to buy raw material back to the country. But now they have created exemption that for company engaging, when we say upstream, those are the ones bringing crude oil, those that deal with crude oil, like Shell, Total, and many of our local entity, Oriental, among them, Nigeria, First EMP. This organization deal with upstream in the upstream sector. Midstream are the one with refineries. Downstream are the one with marketing, like those petrol stations that we normally see around us. They are the one operating at downstream sector. And what did they do? We call them marketers. So I think I have been able to differentiate. Upstream is those one producing crude oil, sourcing for exploration, while the midstream are the refineries, and then the downstream are the marketers. So they were excluded before, but with the changes, they are part of it, that when they export, they are exempted from taxes. But with the changes now, they have classified these people that they cannot take that exemption, or they cannot enjoy such benefits any longer because of the nature of their business. I assume that in this my presentation that we have already gone through changes in 2020 and changes in 2019, because excuse me. And then the other changes was premium received from non-resident. Prior to the changes in section 16, all premium received is not taxable, because when you pay premium, it's not actually revenue. It's not a revenue to insurance company, because should there be any accidents or incidents, the insurer can actually seek for compensation. The reason why they see premium as never a revenue to a company. But the changes is not affecting the local insurance company. It's affecting the non-resident company. Who are the non-resident company? The company that are not based in Nigeria. And they usually, because the government cannot actually determine the exact profit they are making, but they can determine through their premium. The reason why they've introduced tax on the premium received from non-resident insurance. And this is usually applicable to digital businesses that are not in Nigeria. The reason why this was introduced. So the impact on the company is very easy. So we receive minimum and you are within the threshold of significant economic presence. Maybe I need to make clear here what we refer to as significant economic presence. This was introduced by Finance Act 2019. Prior to that, what the government used, what the government was using then was what we call permanent establishments. So when you have a business in Nigeria and the location, so it was then on physical presence in Nigeria before you could be subject to Nigerian taxes. There must be physical presence. But because of the advent of technology, many companies will never be in Nigeria and they are making serious money from Nigeria. The Amazon of this world, the Google of this world, before all of them came down to be setting up business in Nigeria, they are making money online. We buy, all of us patronize organizations from abroad without leaving Nigeria. I order for suits, I order for different things online. So prior to the changes in 2019, most of these profits being made by the non-resident company from Nigeria are actually exempted from taxes. But when government discovered that you don't need to be here to make money, that was when the changes was made to our law. Section 13 was updated and the government came with significant economic presence. The moment you have up to certain threshold of equivalent to 25 million Nigerian naira, whatever you do in Nigeria will be subject to tax. And that is a little bit of definition of significant economic presence. Also, prior to this, there was no taxation of digital service company based on turnover because government could not actually determine what their turnover is, and everybody was exempted. But now, the digital service company are being subject to tax as long as they provide services in Nigeria. All their services is now subject to Nigerian taxes. So also, it's essential for us to see another changes that was introduced in the 21 Finance Act. Prior to the changes, when you compute your taxes and you are to do what we call capital allowance claim. What is capital allowance? These are the investment in qualifying capital expenditure. What is qualifying capital expenditure? This is expenses in capital item for the purpose of generating income. So prior to the changes, whatever the entire changes capital allowance is allowed. There are rules that guide it. Though I'm not expected to do this here because of just introduction, just for purpose of understanding, I will take, for example, if you have a building before, you are to capitalize this item in 10 years. So the first year will be initial allowance, which is 15% of the total cost, plus annual allowance, which is 10% of the total cost. And then the next 9 years, it will be 10% every year that you'll be claiming. And then if probably it is a motor vehicle, it's going to be claimed within 4 years, which is 25% each of each year. And if it were to be furniture, it's going to be 5 years, 20% each. So these are the just giving instances of capital allowance, and you claim it completely. But government, just to generate revenue, realize that you might have an asset that is dormant, that is not being used for the purpose of generating the profits. They are now saying it will be a portion, so you will not be allowed to utilize the entire asset. Number one, entire capital allowance. Number two, we also the profit generated, you have been granted income, exempt income, maybe through incentive, then your capital allowance also will be prorated based on that incentive that you have enjoyed, especially the income is more than 20% of the total income. When we say exempt income, that means income that will not be subject to tax. So also your capital allowance will be prorated to that level. Then we have something, there are another changes that was material for the company operating in Nigeria. Is basically, we call it Section 39 incentive. That's the name we normally call it. That means when you are into gas utilization and downstream, people producing gas, like the gas household that we are using, they are actually exempted to tax-free for 5 years. The initial one but you need to apply is 3 years, and if you perform, the requirement can another 1 year or 2 years at making 5 years. So the changes government brought into it is that, but we have two types of this kind of, number one, Section 39 incentive, and then number two, we call it pioneer incentive. And the two actually grant 5 years each. We've seen some company in the two, maybe the first year they claim Section 39, and after some years they go back to go pioneer, making 10 years. Basically, this is not allowed and is not actually encouraged. So government has now come out that the moment you claim Section 39 incentive, you cannot also come back to claim pioneer incentive because they are on the same threshold. But the challenge is this: we government didn't look into vividly. What happened when the company has been acquired? There has been a buyback, a new owner has come. He has restructured the business, he has changed the shape of business. Such new stuff also must be allowed to have a incentive. That changes, we need to look at the minimum tax relief. So your returns at when due, your minimum tax will be forfeited. The company, what is minimum tax? Minimum tax means when you don't have enough profit, or you make losses, or you don't have your tax is lower than the actual tax that you're supposed to pay. When you make losses, or the tax to be paid is lower than minimum tax, then government will pick the higher of the two. I come again for purpose of understanding. So when you compute your tax and it's lower than the minimum tax, because every company is expected to compute minimum tax. And then when you compute minimum tax, you will compute the actual tax. The higher of the two is what the government will pick. So when your minimum tax is higher than your actual tax, you are expected to pay minimum tax. And then when you are making losses, government is expected you to that. No, you can't make loss without government getting something back. You also will be allowed to pay minimum tax. So when you don't file on time, you forfeit this requirement, the relief, and then you might be forced to pay with penalty and interest. So, and also there is a time within which undisputed assessment is to be paid. Time within which undisputed assessment should be paid. What is undisputed tax assessment? This is usually happen in the course of tax audit. What is tax audit? This is when government verify the return you have filed by checking the taxpayer record to be sure that the taxpayer has done the right thing when filing self-assessment return. And that is what we call tax audit. So when in the course of tax audit, when the report is issued, it is now left for individual to check what they agree, undisputed, that yes, truly we owe this. What government said that you should pay that within 1 month. Since you yourself have agreed that you owe that, you should pay it or accept your right to the tax authority. Because usually most people only like to pay the undisputed until all the tax, until all the disputed issue have been properly addressed. So the changes made it that within 30 days, this will be paid. And then withholding tax on interest for unit trust. Prior to this, there is no withholding tax on interest for a unit trust. So, but the impact is that the changes has made it that the tax when paid over to that shall be the final tax due from non-resident. So, and this is to serve as the final tax. Now, because it's going to be 10% for the unit trust. Prior to the changes, no withholding tax. But now, there is a withholding tax of 10%. Also, the changes affect some certain relief under the personal income tax. So it's not only about the company income tax or CGT. Section 33 said there shall be allowed a deduction of the annual amount of any premium paid by the individual during the year of to an insurance company. So it is allowed now, if you have a life insurance company and you have paid premium, it is allowed for the purpose of tax return. It is a plus for individual, and people can actually plan. Our professors and doctors can plan to have some money in insurance. It will be accepted from personal income tax. Also, the banks are the government can actually demand when they want this to be done. So any bank that contravenes the provision of this section is liable to a penalty. So the banks increase the penalty for any bank that contravenes. So what are they doing? The penalty for non-filing of making return as at when due has increased, especially this affects majorly the financial institution. So they are expected to file the return on individual as quickly as possible. So an offense and penalty before. So when you commit this offense, it's only about just 20,000, and where the offense is. But now the penalty have been increased from 5,000 to 20,000. For general offense, penalty have been increased from 9,000 to 2,000. So what they did here was to ensure that those penalties have become a little bit old. How much is 100 naira? And it has been moved up. This majorly affect the financial institution. And then there were more new sections were also inserted. So number one is that somebody could be told, we told to collect the tax. This has always been there. Because of this is that companies that are not in oil and gas may also be appointed by the company to collect the remit, the tax to the service. Therefore, a taxpayer who are appointed is expected to act. So government can appoint anybody to collect taxes from an individual and file the same to government. Small company in upstream sector, this is common. This was introduced in 2020 by proper. It was actually introduced in 2020, but properly defined. So any company that is not making, in 2019, small company was defined. Any company not making up to 25 million turnover in a year shall not be required to file VAT return, and the VAT will not be applicable to such company. But when government realized that many companies that are in upstream sector might not have turnover at the beginning because of a whole lot of each sum for purpose of exploration, they could be having assets in tune of billions, but no revenue. Government came out in 2021 to exempt company in upstream petroleum operation from that VAT exemption, and asked everybody that you have to file your VAT exemption. What am I saying? They reintroduced VAT obligation on company operating in upstream sector, but the small company that are not in upstream sector can actually be exempted from this purpose. So, and then there is an increase the tertiary applies to about 5% of total of accessible profit. All what you have seen here, if you ask me, is making to more revenue for the company and bring a whole lot of challenge to company or the individual company or taxpayer generally. So as I've mentioned before, this came out under the newly inserted section 1 of the amendment to Nigerian Police Trust Fund is to ask companies that are required to comply with Police Trust Fund additionally 0.005% of their net profits on companies. So this was stated since 2019, but properly stated here now. So companies, when they are filing their annual returns, they have to deduct 0.00 of their net profits. Net profits. That means, depend on the structure of the business, it could be gross profits, and then you deduct other administrative expenses and other related expenses before arriving at net profits for purpose of Police Trust Fund. There was nothing like this before until recent years. So NASENE also, NASE become a law whereby every company is to deduct 1% on their company in the mobile telecom, oil and gas. Now of this by FRS. So this is purpose of for the engineering infrastructure. So the core question that we need to be asking ourselves is what has happened to the taxes that we have paid before? What is the purpose of the taxes that we have paid? So before introducing different levy on the taxpayer. So the excise duty on non-alcohol also was increased of 10 naira per liter non-alcoholic carbon and look at the impact on the citizen, because when they told them, when they collect all of this money, you will expect this money to be spent on improve infrastructure, reset the country, structure everywhere. and make our academic admin on strike forever. So, and our children are too. What are they doing? But government is increasing taxes. And what you have seen in the market today is that you go to market, you buy something of 10 naira, you go there next, in the 2 days, 15 naira to 30 naira. But this is the impact, because the business owner will need to recover their money. So, and then we have money transfer, which is that the moment you 50 naira, all of us were aware of this, one-off charges of 50 naira on electronic transfer, any sum more than 10,000 naira. So, and the impact of this is generally is actually, we are all bearing this, and the money go to the government in form of stamp duty. So there is a stamp duty of 50 naira on every electronic transfer of more than 10,000, of the 10,000 naira or more for every one of us. So the Minister of Finance, the regulation, we are still waiting for the proper regulation to be made, but the changes has already been made and it's part of the law. Now, what we should do is that we should get involved when government is putting many of these laws together. Because if we sit down, it's the same thing with the election in Nigeria. If we sit down and we are talking on social media and we sit down, we are praying, we are fasting, and we are not getting to be on the feed, there might not be changes. It is on the feed that changes will come. So those are the changes that we have in Finance Act 2020. So of the 2021, right from beginning to the end. So if there is any question, it can be dropped in the chat box, or it could be controlled from there, and the question could be asked after my presentation. On the Amendment Finance Act, this is what we have for now. So I'm moving to the PITAM, Personal Income Tax Act of 2011, the changes and the requirement for all of us. I think this is more, this applied to all of us more than the first aspect. The first aspect applied to the taxpayer outside, the companies. So this is you and myself. So let's look at it. We all know what is personal income tax. It is levy on non-corporate person. Who are the non-corporates? Corporate is the companies, but non-company is individual. And then we have this include non-companies. It could be family and community, individual, including employees, self-employed, pensioners, unincorporated trust, because it's managed by trustee, so it's managed by individual, expatriate and any other individual, any income in Nigeria, and partnership. So the legal framework is actually personal income tax 2011 as amended. Imposed married and resident but source rule. So what are the key definitions? I know this is where Dr. saying last time about the individual. Those benefits, anything. So it includes gross emolument as defined, include benefits in kind. Maybe the school authority has given you a car, for example, because of our status. You have a car, that car is benefits in kind. 5% of the cost there will be added to the annual income when taxes are being paid. Gratuities, when it is above 10 million, before the entire gratuity is exempted. But when it is more than 10 million, the balance of it will be subject to tax, superannuation, and any other income derived solely by reason of employment. This is what we call gross emolument. So what is employment? Any service rendered by a person in return for gain is employment. So we have two classes of people, the residents and non-residents. So non-residents are liable to tax only on the income from employment exercised in Nigeria. Whatever they earn, if the employment is a Nigerian employment, they will pay their taxes in Nigeria. But if there is a double taxation, they can claim credits in their country where they are coming from. So, and then we have itinerant worker. These are workers that are or employees that are not fixated in a location. You can find them in more than one state in a year. So who should collect the tax? If you find somebody settling between working with Landmark University, lecturing in Covenant University, and having some Lagos University, LASU, that's Ogun State, Akungba, also. So we can have some at the beginning of the year, so be where they should find their return, because you cannot pay tax more than one places. You can't pay tax on the same income more than one places. So it's necessary for us to determine the itinerant worker and where should they pay their taxes to. Wherever that is convenient or as defined by law, is that for a minimum of 20 days in at least 3 months of every assessment year. So I know that you can have 20 days in more than 4 states within a year. So coming to Lagos, lecture at CU, move to LASU, probably another brief at Unilag, and then you move there, you went to Lead City University, UI, all these are within suburb. So where would the tax be paid, PAYE, it is where it is found. By the time you determine it, that the tax return will be filed in a year. So this is expected and usually create issue between one state and the other. So benefits are sometimes called PEC. They include perquisite other than accommodation and living accommodation. So administration of tax, personal income tax are administered by State Board of Internal Revenue. Individual resident in their state, body of individuals such as community, partnership, federal government. So administration of taxes is actually grouped into 3. Basically, we have states, Board of Internal Revenue, that regulate that of states. So they have, the local government have community also that collect, but basically it is the State Board of Internal Revenue. And then number 2, we have Federal Inland Revenue Service. This Federal Inland Revenue Service is in charge of corporate income tax generally, not personal income tax. But for the Army, Nigerian Navy, police, the taxes is paid to Federal Inland Revenue Service, irrespective of the state they find themselves. Officer of the Nigerian Foreign Services, non-resident who derive their income or profit from Nigeria, but they are not in Nigeria. They have to pay their taxes to Federal Inland Revenue Service. And up to the changes in the law, up to the time Federal Capital Territory Internal Revenue Service was set up about 3 years ago, every resident of Federal Capital Territory then was filing their tax return or paying their tax to Federal Inland Revenue Service in Abuja. But Federal Capital Territory Internal Revenue Service was set up about 3 years now, and they become its administrator for residents of Federal Capital Territory. So if you find yourself in Abuja, your tax will not go to Federal Inland Revenue Service, but it will go to tax or FCT, Internal Revenue Service. Before you can be subject to tax in Nigeria, this particularly apply to non-resident or to individual. A person is considered resident in Nigeria if the employment duty are performed in Nigeria. So if your employment is in Nigeria, this is cardinal rule of PAYE. It is called residency rule. It is what determines who will pay tax in Nigeria. So if you have employment, like we have employment with Landmark University, ordinarily you will pay your tax in Nigeria, unless the following conditions are applicable. The duty are performed on behalf of an employer who is in another country, or the employee is not in Nigeria for an aggregate of 183 days. That's almost half a year in 12-month period. Or the individual is liable to tax in another country, which has a double tax agreement. If you belong to these 3 conditions together, jointly conditioned together, then you might not pay tax in Nigeria. But this is very rare. So the employer is in Nigeria, or if he's based in Nigeria, you will pay tax in Nigeria. The individual serves as a diplomat, agent of in a country other than Nigeria. So you will still pay tax. A diplomat in the US will pay his taxes in Nigeria. An ambassador to Sri Lanka, UK, to any other country will have their taxes paid in Nigeria. So I've explained the non-resident individual before. Then itinerant worker, I've explained this. So income chargeable, we look at this as part of the definition. So PAY is imposed on the aggregate income of every taxable person from a source inside or outside Nigeria. Allows and bonuses from employment as that any benefit is from the company is subject to tax in your hand, except when you have a reimbursable. For example, transport reimbursable. Maybe you travel from location or relocation expenses, then there must be document to back it up. But every other gain in your hand is subject to income tax. And the reason why personal income tax continue to increase, if you do it the way we should do it, I doubt if there will be any opportunity for tax planning under the current regime of personal income tax. The reason why the PAY continue to increase. So before the 2021 changes, then we used to have a whole lot of planning to our personal income tax. And that's when we have 5,000 plus. All this could be maneuvered the way we want it, utility allowance. But from 2011, we only have one consolidated relief allowance, which is 200,000 or 1% of gross income, whichever is higher, plus 20% of gross income. And this has always been amended and whereby subjects that there are some exemption that you have already been granted will not form part of this 20% of gross income. Before you apply the 20% of gross income, you need to back out those, so there won't be double counting of incentive. So, and then other tax exempts. Before, that used to be made, but now that's individual. So mailing, so if there is a canteen up to now, it is exempted for if there is a lunch. But the moment you convert it to cash in the hand of individual, this becomes taxable. So the only issue will be if you want this one to be exempted for the purpose of tax, then it must be general like a canteen. And then maybe you give voucher to staff to go and eat. But the moment it become money, cash in their hand, it will be subject to tax. Interest on loan for owner-occupied building is exempted from tax if you have mortgage and you live in that same house. You should bring it to your personal income tax with evidence. Then the interest will be plugged into your tax and it will be exempted from tax. So you can actually gain. This will reduce the taxes that you are going to pay. We call it owner-occupied building when you live in that same house. Reimbursable, I've explained this one, except where it is cash, where it is not cash-based or you have the receipt to back it up. It's not what you can claim. If it's cash without any invoice or support document, it will be taken as an income in the hand of receiver. And then that if it's not to pay 1% of his total income. So this happens when, after all the deduction allowance, the individual, if you don't have any tax to be paid again, we have taken all the relief, and what you have to pay is very, very small. The government says 1% of it should be taken as PAYE. So minimum tax as provided for under 60 are not applied to a parent in any year of employment where supplement earn the national. So we say when you earn the national minimum wage or less from an employment, there's no minimum tax. You are not to pay tax. That is a plus. I don't know what is minimum tax national at the moment. Maybe 18,000 was the last time. If you are at range, as provided for, you are not to pay any taxes at all. So national minimum wage, every employer shall pay a national minimum wage of less than 30,000 per month to every worker. This is required. Less than 30,000, then taxes will not be paid. So we have consolidated tax relief, and the computation is there on what to do. This is part of the material that I've shared with us, how to arrive in computing the gross emolument, deduction of tax exempts. So I mentioned this, that 2020 Finance Act require the tax exempts to be deducted before computing the gross relief, consolidated relief, settlement. So these are just practical computation of expected pay as you earn taxes. I think this could be computed on the exam in our various classes for our dear students. And these are the rates. Apply the tax band. That is a band with the first 300,000, and this is what happened to arrive at what we pay per month and per annum for individual. I designed this as a practical. I know that one of these that will come to the school premises, so whereby I can share this on the board with all of us. So because there is a change to the tax law, it is important that business read what happens on a continuous basis. Tax law is not limited. It brings changes and is being looked into. As I mentioned at the beginning of this presentation, already the work is ongoing on 2022 Finance Act, so which we can see. So if you permit me, this is where the presentation for this morning. I will be available to provide deeper explanation to this without being political, but the practice to all the questions, what is expected of us. It's always good to have this session and have this kind of discussion within ourselves and with the professionals, especially our students, and then to my professors and doctors as well. We are on the field and we know what is happening and we see what is happening. We are tax practitioners, so we like to share our idea to move the practice forward. Thank you for having me this morning.
Please, let's put a round of applause together again. Let's clap our hands together again for the presenter for opening our eyes again. Please, at this juncture, I want us to understand that question and answer will come after the presentation of our Director for Financial Services in Lamar University. But please, let's put our hands together as we welcome him to the stage. Dear Professor.
The Vice Chancellor, Omar, the Registrar, Lamar University, Dean, College of Business, Business Services, the HOD Accounting, Dr. Oladipo, other professor here present, the team from Financial Service, the Landmark University students, and those watching online. Good morning, sir. Good morning, ma. To our facilitator, Dr. Is it Doctor? Dr. Ademola Olarewaju, thank you.
You are giving me a doctorate degree, and I'm happy to receive that from you.
My Chancellor is here. You really don't want to be Chancellor Lamar University. Thanks so much for that explicit presentation this morning. The Finance Act 2021, for those, is more of progressive, the people that earn her, mostly that the thing affects, and the issue of the capital gain tax, 100 million and above. But the challenge with the employee, the incident of tax, the economy incident of tax, is the employee that will bear it. And when you see the personal income at computation, the Peter 2011, personal income tax at 2011, as amended by Finance Act 2021, before this consolidated allowance, this 20%, it used to be a plus to the employee. But by the time you now see now, it render the disposable income of an employee inactive, even the people that earn higher salary. Let's assume in Nigeria now you are collecting 1 million naira. You not pay tax less than 100 plus, close to 200 tax. Now, we used to hide under the voluntary contribution to increase our pension for future empowerment of our disposable income. But now, even the fact that you make provision for the voluntary contribution, you don't know the Finance Act that will come in the next 5 years. Like those people that eat their money in the shares, they never knew. 10 years ago, that law came, the capital gain tax law, it came that, okay, there's an exemption on the tax on those people that invest in share. The investor in share now, Finance Act 2021 came effective January 2022. Those people now is a lot of issue. But what we'll try to and tell people is there is a way of managing tax. You can either manage tax negatively or positively. Managing tax positively, that's tax avoidance. And managing it negatively, tax evasion. So I think the tax practitioner and the professional accountant, before any decision is taken, let's look at the tax law, because tax is law. And there's a need for all of us to look at the loopholes in tax for us to be able to advise our clients appropriately. There are ways we can reduce the incidence of taxation on the employee. So let's guide them appropriately. The Tax Act, the Finance Act 2021, there are two ways we view at it. We have the tailwind aspect and we have the headwind aspect. That tailwind aspect, we only empower the government. You know, in 2019, when we have COVID-19, a lot of relief were given to the companies. A lot of relief were given to people to ameliorate the effect of COVID-19. But this Finance Act 2021 now came, those relief, those things that we pamper the owner of business with, that pamper people with, this Finance Act 2021 is now dealing with the company. So I think going forward, the tax expert and the finance expert, while we are advising our clients, let's look at the tax law, let's look at the loopholes on the tax system so that to advise people appropriately so that they can have savings, they can avoid the tax by managing the tax, to ameliorate that harsh effect of this Finance Act 2021. So let's advise them. I think in the question, so as to maximize this time, if you have the question, we advise you maybe at the end of this slide on how to minimize or manage the effect of this Finance Act on your disposable income. Thank you very much, Mr. Ademola and the faculty as a large.
Thank you, sir. Visima, please permit me at this point is time for question and answer. From online, we'll have already a question from our former VC, Professor Olainju. The question says, changes in Tax Act 2019, 2020, and 2021. Are we still expecting another in 2022? The answer is easy. We are still expecting more because tax changes or the changes in this tax law come as a result of changes in economic activities and others. Please, if you are here, you have your question, please. Can we please have your question? Okay. Also, another question from online, it says, what is the implication of these changes on the operators or practitioners and even our students? What is the implication of these changes on the operators or practitioners and even our students? Yeah. Okay, students have questions. Okay, we'll go to them. Okay. So, okay, we still have questions. Let me come. Are we going to take the questions? Please, before we go to the students, I want the presenter to respond to these ones. Presenter Saka, please, can you still hear us?
Yes, I can hear.
Okay, please, can you respond to these ones?
So the question I've seen on the chart, there I have about 4 questions there. Number 1, where to pay taxes, especially for federal workers. The residency rule is very clear. Okay, somebody is raising the hand. Engineer Ani, do you want to ask the question before I address the questions?
Yeah.
Okay, sir.
Hello, sir.
We can hear you.
Okay. Now, let me commend the organizer of this highly provoked lectures that are long overdue. Now, are there no other way the employer can protect his employee now in terms of tax deductions? Because from the explanation of the Director of Financial Services, it looks as if all ways are blocked. Are there no way in which an employee of a company, organization like Lamar University can be protected from these taxes that are neck cutting? Thank you very much, and God bless you.
Okay, thank you, sir. Why I'm laughing is because when you said neck cutting, so it is generally for everybody. For all of us that want to do it right, it is neck cutting. I need to say this. I'm a practitioner and I will pay our taxes fully without anything. I will start from your question and then go up there. There is little or nothing that can be done again. The person that spoke after me basically addressed the issue when he made mention of tax planning, which is tax. We have 2 types of tax planning. We have tax avoidance and tax evasion. Tax avoidance is basically applying the provisions of the law to take advantage of it. And that is what I said. The government is going to update their Finance Act. The Finance Act has come to stay. it will be coming with the government budget. So it's part of the finance implication of the government budget. So they are preparing the 2022 now. So what happened here is tax avoidance, you apply the rule, you take advantage. Example of it is what I gave to you when I made mention of section 39, for example, where the company can actually apply for 5 years tax holiday. Some companies have been operating, they never knew. But company that knows about it will apply for it and take the advantage. That's tax planning. The tax evasion is when you intentionally, without having the backing of the law, you avoid payment of what is due to government. And that's tax evasion, and it's criminal. So what they have done, what we have presently under PAYE, is there is little room. That little room is what you can find in pension. For example, you can increase, we have voluntary pension contribution. You can increase your pension. So you take it after your retirement. God give you long life. So you can increase your pension. Number one, it will be taken away from your PAYE. It will not be added. Also, you can do life assurance. Those are the tax planning because we call it tax avoidance. They are within the law. The law provides for it and you take advantage of it. So that is what the opportunity now are limited to, except you follow that path. And what it means that you cannot have those cash with you now, but you want to keep it till future time. So the law allows for that and you can do that. But where intentionally you hide the income, or you compute your tax and you reduce it, say, this one is too much. That one is called tax evasion and it's criminal. And if found, there will be penalty and interest. And at times, it can lead to certain time of imprisonment. God forbid bad thing. So it has reduced. It might be difficult for employer to protect. The other area of getting protection, but the employer might lose the control of it, is in form of reimbursable, asking employee staff to bring invoice for any of their expenditure. So it comes in form of reimbursement, but this will require planning. And can we trust individual to do the right thing? So this is challenging. So any organization would like to do the right thing. So the right thing might mean you pay more. You pay appropriately. So that is the difference between payment. So any organization will ensure that you pay appropriately, deducting what is required, but by yourself, as I mentioned, pension contribution, voluntary, and then life assurance can actually be a form of tax planning. So going to where to pay tax for federal workers, wherever federal workers, any state they find themselves, the state authority of that, the tax authority of that state are to collect the taxes. For example, Federal Inland Revenue Service in Lagos. Lagos State is collecting their taxes. So irrespective of where you find yourself, the taxes is paid to the state you find yourself. I think that is straightforward. If you are in Abuja, you pay to FCT, Internal Revenue Services. If you are posted to Port Harcourt, you pay to Rivers State Internal Revenue Services. If you are posted to Osun State, you pay to Osun State Internal Revenue Services. And like nature. So other question is finance 2020. Yes, sir. That my prof. The last one was more interesting. What the implication of our students. What happens is that the more the money in the pocket of the parents, the more the money in the hand of the students. So if the taxes are actually sharpening the pocket of the parents, then I'm afraid if it will not bring about similar impact on the account of the student. So generally, it affects everyone. The operator depends on where you find yourself. You know, we belong to different segments and different industry. So the impact of each changes affect us differently. The effect is different when we measure it as per what affects us. It will not be the same across board. So the impact is general, or except we want to narrow it down specifically. Let me give, for instance, For the lecturers, for example, the source of the income comes from the school. The impact is a little bit high because the more you work, the more you earn. The more you earn, the more you pay. So the impact is direct. And that is when there could be a planning. Part of that planning is like voluntary pension contributions I mentioned, and then the insurance and few other things, which you can take out of the discussion and find a way of discussing it later on. So for the question we have, I think I've addressed all the required questions here, waiting for more. So,
Okay, thank you. Question? Visima, can I take a question from the audience here present? Okay. Okay.
My question goes to the DFS, standing on established protocols. My question goes to you, sir. We thank God for the lecture so delivered by the experts.
We can barely hear you, sir. Maybe you need to speak up.
Thank you, sir. I'm appreciating your contribution so far, sir. The lecture also delivered. You've been so straight.
Okay, thank you.
My question goes to the DFS here. Sir, the question is it that difficult for us to format modalities, seizing this privilege of tax exempt provisions to benefit staff by way of reducing the incidence of tax? Which tax are we paying here? Abroad, they pay tax they are enjoying. There are facilities that can be expanded to staff with the cooperation of the proprietor base. And we will all be happy for it. The incidence of tax is one of the things sending staff away from this location. So I think we can address that. Thank you.
Thank you, sir. My dear friends, please, your response.
Yes, the incident of tax, like there was a lecture we presented in the course of the year, encouraging staff to engage in voluntary contribution, which a lot of our faculty applied for. This had reduced the tax they would have paid. Like if your voluntary contribution is 200,000, by implication, on that step, various step of deduction, we have 7%, 11%, 15%, 19%, 21%, and 24%. So if your 200,000 that you put to your voluntary contribution, if it fall on 24%, it means on monthly basis, you are saving 24% of that 200,000 naira you put in your voluntary contribution. That's one. Secondly, it will save the tax you'll have paid to inland revenue. So that's part of the inclusive. If you have the insurance of 18, you can bring it up to the office. It will be factored by the tax consultant. It will reduce the effect of your tax. Thank you, sir.
Thank you, sir. Prof, you said you have a question. Okay.
Thank you. The DSF has answered the question, but I'm going to add this. I don't know whether it's a question, and that is the tax law that's just presented are similar to other places. I refer like UK. The only difference is that there's nothing like allowance coming out of finance tax. In the UK, there's always allowance that goes to individuals. Even if it's 1p per pound, that can save individuals thousands of money per annum. The other issue is, when does this Finance Act comes out? It's a yearly thing. In the UK, it's 6th of April every year. Before that, people will know, and individual can contribute to the Planning of Finance Act. So when does Nigerian Finance Act come out? You said it might be part of the budget. Unfortunately, our budget doesn't have a fixed time. The UK has a fixed date, 6th of April every year, so that people plan towards those tax that is going to affect them. Thank you.
Thank you, Prof. Is that your question?
Thank you, sir, our great facilitator. My question has to do with itinerant worker, which you mentioned, and you did refer to a situation where a lecturer or somebody worked at CU or elsewhere at a particular point in time within a year in the course of your definition of itinerant worker. Is that feasible under this current IPPS regime? That's my question.
Please, students, your question, so that let's take the whole question at the same time.
Good afternoon, everyone. So my question goes like this. Firstly, when we started this seminar with, okay, my name is Udiakwe Margaret, Department of Accounting, 300 level. So we talked about the previous changes before this new changes that has been made effective. So my question is, there are tax incentives or tax exemptions that are given to certain companies, institutions. So I would like you to throw more light on the various tax incentives we have available for different companies or different scenarios. And also in one sentence, could you describe the Finance Act 2019? Thank you.
Good afternoon, sir. My name is Oluwabi Nicole Oluwadamilala from Department of Accounting, 300 level. My question goes thus. For the informal markets, that is the mamas on the side of the road, how are they taxed? Does this tax act make provisions for them to be taxed? Also, in the long run, there are people who evade tax, that don't pay tax, that try to avoid it. How does this affect tax accountants in the long run? And do you advise us that are going into tax to continue in Nigeria? Thank you, sir.
Thank you. A round of applause for them. Any other question? Any other question? Okay. Please present us, sir. Present us, please.
Okay. Hello, can you hear me?
We can hear you loud and clear.
Okay, so the first is not a question per se, but a comment by Madam. I couldn't get the name right. Sorry about that, ma'am. You're asking about when is budget presented in Nigeria compared to UK, that is April 6th. And that is where we find ourselves and in the country. So it might be difficult for me to be specific on when the budget will come. It's a general issue and systemic issue generally. Basically, the Finance Act is annually now. Let's take that, and it's part of what government considered before releasing the budget. But when they would do it is when what we don't know. But government has been trying to make it before the end of the year for the past 2 seasons, for the past 2 years now. So let's hope that it will come out. But 2022, I can tell you that preparation is ongoing. They invited us sometime to have our inputs, and I'm sure that it will come out before the end of the year, and then by January, it might become operational. The other question is about the itinerant worker, but still, I don't seem to get the IPPS regime. What does that mean? So I might not be able to address this, but it is a cardinal law. So what is IPPS regime? But the law, whatever the regime, the school, or anybody subjects themselves to, every other thing is subject to the principal law. So government will see it as a commercial arrangement, whatever you plan. It doesn't affect the tax law. Wherever you find yourself is where the tax should be paid. And it is one at the beginning of the year, or where you find yourself as more habitual, where you stay more within those 4 or 5 states where you work, you have to pay taxes to that particular region. But I am aware some challenges. For example, you want to buy a property in some state, and they ask you about your tax card, and you only come to us twice in a year or in a month, and you've remitted your taxes to Lagos State. How do you? So we are aware of this, and then when such happen, it requires one-on-one planning of meeting the Osun State. Maybe that 2 months you ask them, pay in Osun State for them to know that I'm in their states. You can do that personally, because to achieve a particular goal. But what is required by law? Because the way government go about people, let me say, that they deem to be a default of not paying their taxes, purported tax defaulter, is to, they can bring shaming or deny them of their rights of whatever they want as well. So to manage them as well, you think, okay, this 2 months that I am here, I'm going to pay my taxes in Osun State or where for 2 months because of where you find yourself. So it is essential for us to plan, irrespective of IPPS regime. Please know that itinerary worker is defined in the Act, and the Act is superior to all other arrangements. So, and then other one, a lady, the student came out and asked about various tax incentive. Maybe I need to make clear, tax incentive is a topic on its own. It cut across everywhere. For CETA, capital allowance is a tax incentive. There are other, section 23 actually listed all the income exempted from taxes. Like the section 39 I made mention is a tax incentive. When you have capital investment, electricity, you apply it in a local, where you have a company where there is no development and you brought electricity there, there is an incentive. So tax incentive has no limit. Pioneer is a tax incentive, tax holiday of 5 years. So it is a topic that we need to undo because it's broad. It cut across. Under the individual, we have tax incentive. So under Peter, we are CETA, we have tax incentive. Upstream sector, they have tax incentive. So community, host community expenses that is exempted from tax, all these are tax incentive. So a tax incentive basically is the relief granted upon which tax will not be applicable. So it's tax incentive generally, but it's huge. It's huge. So, and you asked me, I believe your lecturer must have asked you this. In one sentence, describe Finance Act 2019. He asked me, I am not a student, but so I will still define it. Finance Act 2019 actually is all encompassing, and it brought changes to our tax practice forever. Because prior to 2019 changes, Nigerians have been, practitioners have been clamoring for changes. There are many that are not in line with global practice. There are a whole lot of them that are already archaic, that they shouldn't be part of our law. But 2019 was deep, and it cut across every aspect of tax practice completely. So 2019 was a landmark, like our landmark university, was a landmark in tax law in Nigeria. So the other question was taxation of informal markets. It has been left untouched for quite some times. You know, but various state governments have come to those Mamaloja by going there to collect 4,000, 2,000. But for me, I see that as an harassment. You are harassing those poor people laboring to feed their children. Honestly, government is not providing support, whereby you say, okay, when you take this shop and you have paid this, government will give you relief. So state government are doing that. They call it independent internal revenue generation of the state. And for me, is a complete mess, putting unnecessary and avoidable pressure on those women and young people trying to find something to eat. So it's being taxed, but it's not formal, there is no much rule. And that is part of where you see small company was defined. But under small company, we still have smaller company. Those are the mama lodger, opening shop. So local government go there to collect taxes. They collect certain rates. They pay rates. It might not be taxes. They pay rates. 2,000, 1,000, 500, 700. Local government go there every time. But the question you need to ask, what have they done with the money they've collected from these people? Have they provided security for them? It's a serious harassment generally for me. And I think it's not the best. Like you having radio in your office, television in your office, somebody say you come and pay radio and television license. You just be wondering, who bought it for me? So, and that's where we find ourselves. So the informal sector, we actually call it informal sector, not informal market. The informal sector is there, and the government is trying to raise revenue from them. Each state, you can see different law. You need to apply, be sure of what is happening from each state. A whole lot of taxes from statutory tax of 31 before. We have almost 72 now. Taxes in Nigeria, bottle, disposal, all these things that are not necessary. So the taxation of informal sector is ongoing. The state authority is the one mostly in charge of this through the local government revenue collection agency. So the last one, I didn't get what happened to, I only put what happened to. So I think those questions that have come, I've addressed them. Let's see whether we have more questions. Okay, sorry, before I let go, what the lady asked was about people that are not paying taxes, that what can happen to them. You know, the way it works is that when you dodge tax continuously, one day you might pay back after you have even forgotten about it, because they might come for tax audit and find the loophole. And the reason why employer will always try, because employee might have resigned, I might have gone. So employer will be the one that will bear the burden. So that's what happened. Government can, what happens when you don't pay as at when the penalty and interest can actually be imposed for the amount of taxes that you didn't pay as at the right time. Thank you.
Please, a round of applause for our presenter. Thank you, sir. Your presentation is up and your response is very encouraging. You still have one more question? Please.
Good afternoon, everyone. All protocols duly observed. My name is Osheni Oludolapo, accounting 400 level. Okay, Finance Act, the first one came out in 2019. We have 2020, we have 2021. So my question is that are the governments and all those in charge actually sitting down and like examining the impacts of this Finance Act on the total taxes that have been generated? Because my final year project research was on Finance Act 2020 and its impact on Nigerian tax revenue generation. And from the study, it was discovered that the amended personal income tax had a negative impact on the total tax that is being generated. So my question is that are the government actually sitting down to examine the impacts of all these changes on the total tax that is being generated? Thank you.
Thank you. A round of applause. Presenter, sir.
Okay. It is required. I like your project and I like the topic. In a developer system, the first thing after you make a change is to sit down and see the impact of this change on different sectors you apply. Number one, the alignment to global practice. Number two, the revenue generation of the government. Number three, to make tax payment easy of tax payments, tax generation. Number four, to reduce the cost of generating revenue. All these are factors that government should have sat down and look at the impact. But what I have seen from the perspective of tax authority and the finance ministry is after doing this one, they go into start for the following year. And the impact they have been, because they've corrected 2019, there was a section that talked about the VAT collected by so. It corrected again in 2020. 2020, they brought that before then, rent, when you pay rent for commercial purpose, that's supposed to be value-added tax, but it was taken away that except for movable item. So a movable item like building, when you pay rent, there will not be VAT on it any longer. You know, instead, there have not been material sitting down analysis of the impact of what they have done. What they are doing is that when the outcry become too much, then they look back. Maybe we are not crying out enough as well. So if we cry out enough, they will hear us and they will go back to specific professions. I remember when they wanted to do the issue of the church leadership, the outcry was high and it was a little step down for now. I say for now because we don't know what will happen tomorrow. So our outcry, we need to increase our outcry as well to make them sit down, because I've seen changes, reversal into 2019, when 2020 came, it reversed 1 or 2 sections. And then when 2021 came, it corrected certain things also in 2020. So to some extent they are looking, but it usually comes from outcry of the taxpayer. Thank you.
Thank you, sir. Please, we want to go to the next program. I sincerely apologize to anyone whose question has not been attended to. It's because of our time. Actually, we've spent more time than they budgeted, and in accounting, that is not proper. Please permit me, Visima, to welcome to the stage Mrs. Oladipo for appraisal of the webinar.
Thank you, sir. Still standing on the existing protocol. This is 24 LUCRID webinar appraiser, and this is hosted by the College of Business and Social Sciences in collaboration with the Department of Accounting and Finance. It is held on 13th July 2022. The title of this webinar is Finance Act 2021 and Personal Income Tax Act 2020. That's based on compliance, tax compliance, and how it affects private and public sector employees in Nigeria. And it was presented by Mr. Ademola Olariwaju of Assertion Consulting Services. And here are the highlights of the webinar. The webinar commences at exactly 10:12 a.m. with an opening prayer said by Dr. Falaye. And then the attendance, it was well attended both physically and online. That's our online attendance recorded 27. And then our physical appearance here, we have about 56 attendees and total of 83. The category of people that are present here are landmark management, faculty and staff of Department of Accounting and Finance, and then some staff of corporate affairs. Then the purpose of this webinar is to expose students, staff, and students of Lamar University to practical knowledge of the area of personal, especially Finance Act and personal income tax deduction, and how it reduces the liability in the area of allowanceable deduction from the experts. Then we have the lecture presented was somewhat simple and clear, in clear language, and was well understood by the participants. And then the act amended, as in some of the highlights of the things from the things we got from this teaching is that the act amended 39 sections in 13 extant law with different major amendment across the existing tax law, and the law took effect from January 2022. The Nigerian government's objective, as in the objective of the Nigerian government of this law is to, as in the nation's fiscal, to update the nation's fiscal policy, and also as in to support their revenue generation drive and embrace local tax administration practice. And some of the ingredients included in this tax, as in pay tax calculation, we're told that the first 300 is of 77%, the next 300 is on 11%. Next 500 is on 15%. And then the next 500 after that one is 19%. And then after that 1.6 million, 24%. And then from 3.2 million, we have 24%. And then we are told some of the exemptions, tax exemption item include National Housing Fund contribution, and we have National Health Insurance Scheme, Life Insurance Scheme, National Pension Scheme. Those are the things that we can be a tax exemption. Then we have questions were asked by staff and students, and the answer were provided by the guest speaker and our able DFS. Then we have some technicality due to the weather. We have technicality issue due to the weather. And then the action is that we are all advised to pay our tax. That it is a law, not a choice. It is a law which is mandatory by everyone to pay. So we are expected, maybe we have some business and everything, we should always read the law and then seek the help of the experts when we need it to be able to, be due to the constant changes in the tax law. So we are all expected to pay, and then we appreciate the Landmark University Management for this webinar that is well informed. Thank you.
Please, if you are clapping, you can do it better. Thank you. Please, at this juncture, it's my honor to invite our own Vice Chancellor for vote of thanks, please. Students and staff, shall we rise?
Thank you so much. Please, may we be comfortably seated one more time. We are rounding up this program. And having listened to the facilitator, and of course, the Director of Financial Services, you know, a lot of things, a lot of questions are really boggling some minds, including me. We pay tax. I remember I watched a playlet many years back, I think in my secondary school, if I will remember. There was one that said there was a couple, and the wife said, "Let me go home. Children keeps minding." The husband said, "Let them mind. After all, we pray and pay tax." The wife said, "We pay tax, but the people we pay tax to, do they care for us?" Yes, the husband now replied again, "I said, we pray, so let God mind them. We pay tax, so let government also mind them." Truly, arising from that, as I remembered when the facilitator was talking, it's like saying, let God and government care for us. The God we pray for care for us. The government we pay tax to care for us. Truly, do government care for us? Do government care for us, even with all the taxes that we all pay? Mr. Facilitator, sir, our dear financial Benga, is it Olu-Ademola? Do governments really care for us? You are the people in charge of tax, and you follow up. You just told us that Financial Act 2022 will soon be released. And you make amendments to suit government. What amendments have we been making to suit we that pay the tax? I'm sure the same road I ply is the same road you ply. I mean, don't let us talk about, infrastructure now. Everyone has decided to care for themselves by, mimicking the tap in the name of boreholes, deep wells, and all of that. Even when you talk of electricity, everyone is also mimicking the role of the government in the name of all of these expensive ways of getting, energy sources. How can we make the government care for us in this 2022 Financial Act that is upcoming? That is my question. So I don't know if you will answer that much later. Now, in closing, our dear students, you have taken something from here. And I was glad. I was just whispering to my registrar when I saw 1 or 2, 3 students, consciously taking notes. And I had to ask the dean, who teaches tax? And he told me our faculty members that teach it, Accountant Femi, Accountant Maduba, and he also mentioned one person, yes, our HOD, that they are the people that they are the people teaching this webinar topic today. So I was glad in my heart to hear that. It's like bringing us to a practical session of what we have been learned or what we have learned and still learning in the classroom. So I want to say that we must have enjoyed the webinar of today. Dear students, if our answer is yes, can we echo it? We enjoyed the webinar of today. Okay, so on this note, we want to appreciate everyone that has been part of it. I'm not giving the vote of thanks, but let me especially appreciate my immediate past Vice Chancellor, who has been always following up on us, Professor Adeni Olayanju. And when I saw him online, I said, wow, I'm not surprised.
Thank you, thank you, thank you.
I said, wow, I'm not surprised that he's here with us today again in today's webinar. Sir, we appreciate you for always being there. And I know we decided to follow the pathway you created, and we are assuring you that it's not going to be less. We'll continue to do more and more and more. Please capture this picture for me so that sure, before evening you will see it on the post. You know, we have a common platform. You will see it there, sir. Accountant Femi also knows that place where we meet ourselves virtually. So we want to appreciate every one of us for being part of this today. It's a way to go, honestly. Our dear presenter, our dear facilitator today, accountant, is he an accountant? Yeah, definitely. Accountant, yeah, a tax practitioner, Ademola Olanrewaju. Our dear accountant, Olanrewaju, sir, we will create another platform to bring you up. We really have enjoyed the facilitation today, and we know that, please let's put our hands together for him. And honestly, what you have brought to the fore is the concern of every man that earns salary in Nigeria. We really need to know the way to go. How much of my money should be deducted? And how much, that should be deducted that will not cost me pains? Because every salary is budgeted before it comes. And so if we keep deducting and deducting, I will never be happy at that. So how can we enhance what we take home so that whatever we take home will surely take us home? It's one thing to take something home. Are we sure that whatever we are taking home is taking us home? So we want to see a way to ensure that whatever we take home actually take us home comfortably. And that's why we are saying we may need to bring us back. I've already opened up the chat, with the Director of Financial Services and Dean, who is an expert, in saving money. Dean, the Dean College of Business Studies, so that we see how to take it, forward, from here. And so in shortest time to come, sir, we may need your services one more time. And so our dear students, faculty, and staff, I have personally appreciated and enjoyed today's webinar. Thank you, College of Business and Social Sciences, our Dean, the faculty, the staff, and the chief organizer, who really has facilitated today's special day. We appreciate us all. God bless you.
Please, a round of applause for our Vice Chancellor. Thank you, Ma. Please, Ma, permit me to welcome the Dean, College of Business and Social Science, for Vote of thanks. Dr. Benkele.
Thank you. The Vice Chancellor, permit me to stand on already rolled out and running protocols. Let me start by making one comment that I would have made before now, just to say that to my professional colleague, Mr. Ademola, well, when I saw the name written, I wanted to see FCA at the end, because that's how we showcase the finance professional, FCA, FCATI, to ensure that, just like before now, Governor Ibikunle Amusu, when you go to anywhere and you call his name without putting FCA, will not stand up, even though he was a governor. And we are telling ICANN members and other professionals that that should happen. We don't call us engineer, so something must be there to show that you are a chartered accountant. Thank you very much once again, sir. Let me start by appreciating the Almighty God for this day that came to be. We should not forget that the Bible says it's a day the Lord has made, that we may rejoice and be glad in it. So we start appreciating God for making this day possible. And let's also appreciate Lamar University, Preparatory Base, for creating this platform. If there was no platform called Landmark, we will not be here in this exciting webinar. Let's appreciate management for this program because they give approval for this program to happen. Otherwise, it will not happen. Led by the Vice Chancellor who is in our mix today. We appreciate the registrar who is very busy somewhere. However, her mind is here and she has to send somebody to represent. Put your hands together for the registrar. Our own Director of Financial Services is here live to contribute to this webinar. We appreciate you, sir. We want to appreciate the Department of Accounting and the college, for making this happen through the LUCRID SG17 team lead, that is Dr. Oladipo Olufemi. And interestingly, all the acknowledgement has not mentioned SG17. I think it was maybe an omission, but that should be mentioned because it has to do with partnership. So you mentioned that Dr. Femi is the team lead of that SG group. I want to appreciate that group for what you are doing. And of course, bringing it to our college. So at least the college is also accumulating so many webinars. And very shortly, the VC will give us an award. Thank you, man. So I want to also appreciate everyone online watching us. The VC have done justice to that. I want to start by appreciating the immediate past Vice Chancellor, Professor Olaniju Adenei. Please put your hand once again together. You see, I was looking at my note to make sure that I call it properly, sir. Thank you very much, sir. I appreciate you, sir. And everyone online, we appreciate you all. Not forgetting that the Directorate of Financial Services sent their team here. You can see the accountant from the Medical Center and others that are around. Put your hands together for the Director of Financial Services. And most of them are online. We appreciate also the CIA members. I think they are here. CIA. Maybe they've gone. They're online as well. We appreciate you, sir, because we were invited for this webinar. The Bosley unit of Landmark University Secondary School, they are also online. We appreciate all of them. And every other person who has participated. If there were no participants, the webinar would not be as successful as it is today. We appreciate all of you. Please put your hands together for yourself. And finally, we celebrate ourselves for being here. Once again, we thank everyone for coming. Thank you.
Thank you, sir. Please, a round of applause for our able dean. My Vice Chancellor, Lamar, the Holy Book says that whatever that has a beginning has an end. Gradually, we are trying to come to the end of this 24th webinar and look forward for the 25th. Please, ma'am, permit me to welcome Dr. Ajayi for closing prayer.
Let us stand up. Our gracious God, we are grateful unto thee for the time spent. Father in heaven, be thou exalted in Jesus' name. We thank you how the thing went smoothly, be thou exalted in Jesus' name. Father in heaven, as we go, all the takes home of the webinar, Lord God in heaven, you will be with us in Jesus' name. And the grace to pay our tax, you will give unto us in Jesus' name. And your grace will be mighty upon our lives in Jesus' name. Thank you, Father, for the answer prayer. In Jesus' name I pray. Amen.
Praise the Lord. Please, every one of us is expected outside for a group photograph with the Vice Chancellor. Please, let's do that quietly. Students, please, our kings and queens, please, can you move first? Let them move first. Don't go. I didn't say you should go, kings and queens. Please, outside for group photograph so that you can still